Welcome to Origins, the podcast that dives deep into the business of venture capital, where we learn how the people behind the capital, both the GPs and LPs, make decisions. I'm Beezer Clarkson, your LP co-host from Sapphire Partners, where we invest in exceptional early-stage venture capital managers ranging the spectrum from emerging to established franchise VCs. As most of our listeners now know, we're temporarily missing my GP co-host, Nick Charles, on the mic, as he takes some well-deserved time off for family leave. Today, we're also taking a break from our franchise fund mini-series to talk to a GP who, though I'm going to give her one, really needs no introduction. At Origins, our aim is to talk to truly tremendous GPs and LPs who are the best at what they do and who can help us peel back the curtain on what it means to be an exceptional investor. Index Ventures partner Nina is all of that and more. Nina's been with Index for nearly a decade now, and before that, she worked at Google as an FP&A lead, where she helped build the GTM infrastructure of the AdSense sales organization. Prior to her tenure at Google, she worked on trading floors in New York and London for Citigroup. She's the founder of Hive Ventures, the first seed fund focused on Armenian entrepreneurs. She's a Forbes Midas Brink winner, and she's on the board of ServiceTitan, which was, of course, 2024's year-end landmark software IPO, which I'm very excited to dig into with her. So what does she have to say about the venture landscape's ups and downs, her philosophy on leadership, and what it takes to be great? Let's bring her in and find out. So Nina, thank you so much for coming on the show. It's really super to have you.
Oh, thank you so much, Beezer. I'm very excited.
So I thought, as a way of introducing yourself, you could tell us a little bit about your time working on the trading floors in New York and London as an introduction to the world of finance and how that sort of kickstarted you into this massively successful launch into venture capital.
So I didn't have plans necessarily to end up in VC. I'd love to say that I knew exactly what I was going to do when I was 18 years old. I thought I was going to be a lawyer. I used to read all these Agatha Christie books, and I love like detectives. And I thought, like, how do I make that into a career? And of course, you watch all these shows about, law and order. And so I went into college thinking I was going to be a lawyer. And I remember interning at a law firm one summer, and I was just like, gosh, I think the climb for me to actually make real decisions is going to be years and years, like law school, then paralegal, and then a ton of training. And so I started to ask around a lot of my friends, what they were doing. And I kind of stumbled across trading. And so I did it as a summer internship, and I just fell in love with it. I loved how you had to make very, very quick decisions, sometimes with little information under a lot of pressure. I love the intensity of the atmosphere of a trading floor and how dynamic it was. And also I thought, gosh, if I could survive this job as a, 21-year-old, I really could do any job after this. So it felt like a really good kind of boot camp, waking up at 4:30 a.m., working all day, being expected to also go out at night with clients and then do it all over again.
I really want to geek out and have a Law and Order conversation with you, but maybe we'll save that for a in-person conversation. Can I extrapolate a bit? I know we're gonna talk a lot about ServiceTitan, but I'm so intrigued by the combination of detective work and making decisions under pressure. Am I putting words in your mouth when you can see these threads in venture being useful skills?
Oh, yeah, absolutely. Sometimes I joke that trading high yield credit, which basically is taking a view on the credit stack of companies that are either coming out of bankruptcy or going towards bankruptcy. It's kind of like the dark side of venture capital where you're betting on everything, going right. It really does teach you thriving in ambiguity, where sometimes things are, you have to take a bet on the management team. You have to really know, like, okay, what are the tailwinds for this business? You don't have perfect information. And especially on the trading floor, things happen so quickly. So you really have to have a prepared mind. So I couldn't have guessed that my trading experience would actually have a lot of parallels in venture capital. But looking back, it's kind of funny to see what some of those skills were in the making at the time.
I'm with you. I started my career as an investment banker at Morgan Stanley doing project finance, and I hated it. I probably was terrible at it. But I'm with you. I was like, well, if I can survive this, everything else is going to be gravy, right?
Exactly.
Okay, so we're going to pull it back and we are going to talk about ServiceTitan. And I know everyone is excited to hear about the IPO, but I want to pull it back to the origin story because I suspect there's something really wonderful that we want to hear about. In particular, the part that we were thinking about was in your blog, you wrote when you joined Index back in 2017, you were asked which company was the top of your wish list to invest in. And you answered ServiceTitan like right off the bat. So you were a prepared mind. What was it about the company that put them there to just start the whole origin story of your experience?
Yeah, so I had met Ara and Vahe when I was in college. There were not a lot of Armenians at some of these Ivy League schools. So instead of having separate clubs, we kind of would join forces together as like one Armenian club of all these schools. And so I'd gotten to know them and kind of had stayed in touch with them. And the thing that really stood out to me was, number one, these guys, Ara and Vi, they graduated from phenomenal schools, were technical. They probably could have gotten any job they wanted at some of these big tech companies. And it was so contrarian that actually they decided to move back to Glendale, California, where their parents were, and help their parents with their home services business. And I remember that always being that just stuck in my mind because I was like, wow, that's incredible that, they're leaving these high paying tech jobs to go and build software for their parents. And so that always stuck in my mind. And I had kept in touch with them. And I just remember their relentless focus on building an amazing product for their customers and some of the values that they had. So for example, the two of them, anytime they would hire a new employee, they would make them drive around at 5 a.m. with a plumber or an HVAC technician so they could really feel, how hard these individuals work. And I remember talking to some of their customers, going to some of their trade shows, hearing some of these anecdotes. And so when I got to Index, I was like, team, there's this company in Glendale, California. They sell software for plumbers. And it was a little bit of a, are you serious? But then if you take a step back and you really think about the infrastructure of the United States and how some of this spend is really, it's mission critical, like the lights go out, the heater goes out, your shower stops working, you are calling an individual. And this was really a forgotten industry. And so I just love that these entrepreneurs had really started the business to solve a problem for their dads. And they realized this was an enormous market and really put their lives behind this mission.
Oh, that's such a heartwarming story. It's so nice when good people win.
Yes.
Just so nice. I know the IPO is only a financial transaction on the road of many winnings. It's not been lost on everyone that the IPO world has been challenging, to say the least.
Yes.
And ServiceTitan's IPO was a big deal last year, so congratulations.
Thank you.
How did you guys, obviously in concert with the company, assess the market and decide it was time? I can't imagine it was easy, or maybe it was obvious. I don't know. Maybe I'm wrong.
Yeah. So I think that there's a general belief that we have at Index, which is great companies can go public at any time. And a lot of people talk about like picking the perfect timing for IPO. And I think you nailed it, Beezer. It's really a step, in another chapter. And so really what determines if you're ready to take that step is, number one, it is a big time investment. You got to hire an IR team, make sure you have a great CFO. Your management team needs to prepare all the materials for the road show and the testing the waters and really, being ready to be a public company. And I think it comes at a point where you look at, okay, what is the next chapter that we need to embark on? And is this the right time to undertake the investment to be public? And, I have to say it took a lot of confidence because like you said, the IPO market was pretty much shut. I mean, of course, there were a handful of successful tech IPOs in 2024, Rubrik and, a few others. But it wasn't like the 2021, we'd see all these charts from the bankers where they were like, this is the worst IPO season in decades. And so I really give credit to the management team for having the confidence in their business, in what they're doing and being very intentional about why now. And I think that's a conversation that's happening in a lot of boardrooms for private companies. And I'd say probably the hardest part is for a lot of companies that are still private, the goalposts really did change, right? We all talk about how it was like growth at all costs, up until 2022. Then all of a sudden it was a hardcore pivot to profitability and unit economics. And now it's both. And I think that's really a healthy reset. And hopefully this will show that, good companies that have both of those things can brave the public markets and take the step towards that next chapter.
As an LP, right, we're very conscious of the liquidity or lack of liquidity or the timing of liquidity in the market. And the last couple of years of lack of distributions has been challenging, to say the least. But that's also married with a dialogue that we hear, and I'll say my favorite phrase, which is LPs are like the peanuts in the peanut gallery. Like you're so far removed that all you do is get to hear what's happening, but you're not in the room. You hear a lot of, well, the founders don't want to go public. And to your point, there's a lot of hard work, right? There's no lack of hard work to do it, but some people just literally do not want to do it. And we can, name names, but everyone kind of knows publicly who's sort of already said that.
Yeah.
Was there something about these founders and this opportunity, they just had a different mindset about it? Like, were they, heaven forbid, excited to be public or I don't know, but just the difference in mindset is interesting. And I'm just curious, given your experience, we can always also extrapolate out in general when you see founders looking at IPOs, how are they thinking about this? Because I just think there's a lot of different tensions in the market right now around IPOs. But if you don't want to be a public CEO, you can't make somebody.
I think it's an excellent question. So as every entrepreneur knows, when you take venture capital money, you are signing up to one day have liquidity, hopefully. It's either an acquisition or an IPO. And so you're kind of signing up for that journey and one of those destinations. What I think has happened in the last couple of years, of course, is that we've seen, in 2020 and 2021, it was the emergence of the crossover funds. Now we're seeing a lot of these, SPVs or, sovereigns or foreign investments come in. And it's actually given a lot of founders another option to keep funding their company or providing liquidity to their employees. And so it's kind of taken away some of the allure of going public, which oftentimes was liquidity and more capital. Mm-hmm. Now, that said, I think that a lot of people still believe in the merits of going public because, number one, it's a better cadence to get into, Wall Street, and the governance of being a public company are things that can be very useful in keeping your company on track. Second, I think it does send a signal to your customers that you're here to stay and, you're committed to the next chapter of being an enduring company. And then third, it does provide even more liquidity options than a tender offer every couple of years that usually has a lot of rules and regulations with your employees of how much they can sell. And so I think it's one of those things that it's easy to think like we never need to go public. But ultimately, you do need to return the capital to your investors and provide that liquidity to your employees. In terms of certain types of founders, certainly we've seen that some founders just don't scale to be public company CEOs. And I think an important thing to do as a board and even as a founder is really to look in the mirror and say, am I signing up for another 10 to 15 to 20 years in a completely different job?
Yay. Well, on that, let's talk about some of the things that they could be looking for as far as maybe signals that you saw from ServiceTitan's IPO about the market, and what were you reading in the, how do I say this, in the broader tech and SaaS markets, maybe particularly for vertical SaaS players that you're like, okay, they can choose to or not to, but now is a good time, because December 2024 might not have been obvious to other folks, but clearly you guys were reading some signals where it felt right.
Yeah. So I think it's a combination of like the external and the internal. The internal, we felt like we had the numbers, we had the team, we had the systems, we had the audit, everything was ready to go. And I think externally, it's really building a trusted and open conversation with a lot of the buy side that luckily, I think the management team did a great job of building trust with over the past several years. I think one thing that's really changed is a lot of these long only and buy side folks, they're trying to get to know the management teams much, much earlier in the cycle. And so then it's less about sharing the story for the first time, but really sharing, okay, here's our vision for the future. Here's what we've delivered on that we told you we were going to deliver on. And so I think it's always a combination of both. In general, founders today, they need to take a look in the mirror and make sure that their business is really solid on all of the things that the buy side cares about. And that's really important to have in place to then, be able to create that cadence and that trust with public company investors.
Oh, I love that you brought this up. I have this memory. A friend of mine used to be, this was a zillion years ago, maybe a decade, a buy-side investor. And she used to come to these tech conferences because she had this challenge, right? Where she was saying how they get, I don't know, typically 30 days to meet and know the company back in the old roadshow days.
Yeah.
And she kept saying, and I, of course, was not helpful being on the LP side because she kept saying, I would want to meet the Ninas and understand what is going on, because I want to hold the stock for a long time, but the information was just so different. So appreciate you breaking down the process that people understand just how much there is on the mechanics of the IPO that are really important to respect. On that vein, I know we're going to talk a little bit later on about other predictions, but given what your experience was in December and how you see things shaping up, do you have any sense for the exit window for SaaS companies? I know we're crystal balling it, not going to hold you accountable, but as a person who went through it most recently, how's it feeling?
Comforting to know that there will always be a bid for great founders with strong product market fit operating in large markets. It was just a great reminder and data point of that. And I think it gave a lot of inspiration to other SaaS companies that have been operating really hard behind the scenes, wondering, what does Wall Street care about? And this was a great example of, they do care about phenomenal founders, solid business metrics, and a big market. And I think as long as you can tell that story and show why you're the right team to take advantage of that opportunity, I do think that there's a bid for that. Now, what I will say is because there was so much spending in 2020 and 2021 to acquire revenue, one of the things that I think as my prediction for 2025 is that we're really going to see a test of true product market fit. So what does that mean? It probably sounds crazy for me to say you could be at 50 million of ARR and not have product market fit. But I actually think there's a lot of false positives of product market fit. For example, if you give away the product and it's extremely cheap and customers buy it because they're like, oh, it's so cheap, sure, I'll buy it. I think that there's a lot of experimental budget, especially in AI, for example, where a lot of these big companies, they almost have carved out a particular person whose sole job is to buy every latest and greatest AI tool and test it out. I wouldn't say that's a strong signal of product market fit. And so I think 2025 is going to be a little bit the year of reckoning of, if you doubled your prices, would your customers still get value out of it and still want to buy it? And I think everything that's happening, for example, this week with DeepSeek is really interesting because now everyone's like, oh, wow, there was an acceleration of what everybody thought was going to happen, which is the commoditization of, serving a lot of these models. And I think people are scrambling to think okay, what does this do to the ROI case for investing in AI?
Oh gosh. Okay. Let's just jump right into predictions and AI. I don't want to blend in some of the other questions I sort of was thinking about for IPOs, but I completely agree with you. And again, I think as an LP, we live in some level of fear that this product market fit isn't really there. And how will we know? And maybe this is an unpopular thing to say, but you get so much more data than we do. The trust is on the GP to assess this. And it does feel like there's a lot of revenue that is revenue, but it's not sticky. So if you were going to say, how do you then translate that into the metrics necessary if someone wants to IPO? Let's even give them a window of 2 to 3 years. Is it a margin? Is it a cohort analysis? Maybe it's all of them. What are sort of the signs that you're like, this is real and it's IPOable versus developing? We'll be polite.
Yeah, I think it's a couple of things. Number one, I do think taking a look at sales efficiency and the cost to acquire that revenue is really important. So for example, let's say you sign a multi-million-dollar, contract, but it takes you 18 months to implement the customer. It takes, a team of 30 people, X many thousands of hours. You really ask yourself, do you really have product market fit there? Or should you be charging more to make sure that you can actually deliver on that? And if you charge more, are the customers still going to buy it? That's one. The second is the holy grail of all SaaS investing, which is net dollar retention. This is why things like even just gross churn is important. And then the ability to land and expand, whether it's selling into more seats or upselling and cross-selling new products into your existing customer base. And the beauty of SaaS, of course, is that it's recurring. So in theory, the longer you have the customer, if your product is really good, then you don't have to reacquire them, every year, or, as consumers, like consumer companies, like you have to constantly like make sure that the consumer is there to use your product. And so I think those two things are really clear signs of product market fit. And when we do our diligence, truly one of the questions I always ask the customer is, if they were to double the price, would you still be enthusiastic in buying this? And the best answers are, yes, but please don't tell them.
I was going to say, that feels a bit like a double-edged sword to answer. I get it's a great question, but I bet they're scared. Right?
Yeah.
Wow. Okay. So you brought up DeepSeek and AI. And then, so how do you, and I realize it's still very early days for some of the DeepSeek information, but when you're thinking about 2025 and this intersection of what's exciting for AI and some of the changes it's bringing, are there anything that come immediately to mind? Which is, I realize I'm taking it to like new investments versus how are people going to exit and deal with, we can talk about it later, like how do you then bring AI into your existing company so your product market fit happens. But I'm just sort of curious on what's the go forward that's exciting?
Yeah. So I think in 2025 comes into this question, the ROI of AI. And the second one is probably who actually has a moat. And I think that there's a difference where AI is the feature. So for example, you're already automating, or your vision is to automate a certain workflow or function. And AI is just a turbocharger and a feature of that vision. I think that has a lot of merit, because then you're saying, look, like there's a clear ROI. You were doing X manually. Now you're doing it in this workflow. And by the way, AI is helping to accelerate the thing that you were already doing. I think that there's a second group, which is AI replacing a lot of functions. And I think that one is the one that is a little bit harder at the moment to know if it's really good enough to replace, for example, like an SDR or a customer support person. And I think that's where we've seen a lot of companies raise enormous amounts of capital. And I think we're still waiting to see like how that actually pans out. I was talking to a portfolio company of mine, asking them about customer support and what they were using for AI. And they were telling me that they actually signed up with 3 different AI customer support companies, and they benchmark the performance of the 3 every month, and then basically shift the ticket volume the next month to whichever one was the best / the cheapest, and then basically do this in real time. And I was like, wow, there's like, no loyalty or lock-in. Now, the theory would be that if you consolidate on one, hopefully it gets better and better over time of understanding your particular customer base and your policies and things like that. But I still think we're in early days for that.
Oh, so interesting. I had this crazy thought last night. So this is me real-time crazying. Feel free to tell me it's wrong. But I was wondering if it's true that DeepSeek, we still have a lot more to learn about it, has shown there's ways of doing things cheaper, faster, better, which may or may not be true. But if it is there a world, and this is getting to the exit M&A world of 2025, where some of these large corporates sitting on just ginormous chunks of money could use it for acquisitions instead of development? I mean, this was me, again, just trying to extrapolate like what might be true, because we haven't seen as many of these acquisitions, and some of it can argue it's regulatory, but I think there's also been an interest in building, from what I've read, companies have wanted to build versus acquire very expensive firms or companies because of the valuations. How crazy do you think I am? And this is early days, but this was just my thought bubble last night.
So you're thinking that there would be more acquisitions now?
Potentially, because you could say, hey, I need a team that can run fast and do something new and think a new way. And here's a company doing these 6 things. And I had all this money earmarked for whatever I was going to develop, but maybe I want to acquire now because I don't need to spend all this on infrastructure, but I need to be smart at the application layer or whatever these pivots might be. Again, as an LP, I'm out of the weeds of this, but this was my thought bubble.
I definitely think folks that feel behind in AI are thinking about acquisition as a way to catch up. That's definitely happening. I also think that because there's been so many copycats in particular verticals. So if you look at like code gen, there's like so many companies. Or if you look at the go-to-market stack of, using, building an AI CRM or an AI salesperson, there's so many companies. I bet we'll see some consolidation instead of a race to the bottom in terms of how much you can charge per phone call or per ticket or per whatever it is, developer or line of code. I think that there'll actually be some consolidation of startups teaming together. And that is hard to do because you have to, recap the cap table. There's a lot of cultural meshing that needs to happen. The two founders need to have alignment on vision. The investor groups have to be on board. But that might be the only option for some of these companies to actually make it in some of these very crowded markets.
And you had given a prediction in TechCrunch about potentially more M&A versus IPO in 2025. So that's obviously not the consolidation angle, but were you thinking about something else about why there might be more M&A or any M&A? All M&A is good M&A? Maybe not, but.
Yeah, we do have a new administration. I think there's a little bit of hope there that, it will be more favorable to acquisitions. Second, of course, the Magnificent Seven, but also take them aside. There are a lot of companies with a lot of cash that are constantly looking to pick up phenomenal talent. And because AI talent is still pretty scarce and hard to find, I imagine that the talent war will start to heat up. And one of the ways that these great companies can find that talent is through acquisition. And so that's my current hypothesis on that.
And then are you also seeing companies, as you're saying, work with AI? So I'm thinking about the companies that are older, writ large, like this 2017, 18, 19, that I don't know how many of you see them integrating AI that might necessarily been using it, but can they use that to sort of leapfrog ahead or solve their product market fit situations?
So this was a big question when ChatGPT came out. Because the question that a lot of folks around the table, investors, were having was, so do you back the incumbent with the distribution, or do you bet on the young, scrappy team that's AI native, that's going to go after this space? And I think it really depends on the market that you're going after. And so I think if you are building in a market where bottoms up go-to-market motion could work, then maybe you can outpace the incumbent pretty quickly. But if you're going somewhere where like actually having, outbound sales teams and in-field reps and, things like that, where it takes years to build like mass distribution, those get a lot harder to invest in the AI native because you ask yourself, okay, if this incumbent just buys an AI team or really invest in AI, could they deliver this solution? And I think that's the question that a lot of people have asked. So there's some industries for sure that I think would be hard for incumbents, like education, for example. I think it'd be really hard for an education software company to all of a sudden build like a brand new AI tutor for students or a feedback tool for teachers to use, which is why, for example, I invested in a company called Class Companion that enables teachers to provide personalized feedback on essays, especially around like AP tests and AP classes. And so I think education is one. I think anything that has a lot of unstructured data, that now all of a sudden you can take that data set and make sense of it, like drug discovery, for example. I think that's a really cool opportunity. And then there were a lot of these forgotten industries, right? Like I invested in Viscom, which builds software for industrial designers. And in that case, there is a big incumbent, but it's a lot of point solutions. And, this team had a vision of how we can empower the human and accelerate design versus automating design. And it's been really interesting to see that company's traction because they've really hit on something that industrial designers love.
Oh, it's so interesting. I love the marriage between I'm hearing echoes of some of the ServiceTitan aspects that you enjoyed, which is how does this real world actually work with some of the next generation and deliver a new result?
AI is kind of a moment for a lot of these legacy industries to like leapfrog and get AI the same time like an engineer at Airbnb could get AI. So for example, in the past, a lot of these industries, were late to getting the cloud. They were late to getting mobile. They were late to getting fintech, ability to process payments. But now all of a sudden there's this new crop of AI companies that are like, oh yeah, let me bring AI to this blue collar industry. And then all of a sudden, this industry gets to use ChatGPT or other incredible AI technologies and completely, is on par with what great tech employees are getting to use. So I think that's a pretty cool thesis to invest behind.
Oh, I love it. That gives me a lot of encouragement because sometimes AI feels like a kind of a deep, dark, scary rabbit hole, shall we say? Right?
Actually, it's crazy. I hosted a dinner here in San Francisco with probably like 8 of the top, I'd say up and coming AI founders that are building AI for legacy industries. Mm-hmm. And almost every single one of them said, I don't even put AI on my website because a lot of customers feel like it's just marketing hype. Again, they want to know, what is the impact to my business? Are you going to decrease my costs or are you going to increase my revenue? Are you going to give me better data to make better decisions? Or, are you going to unlock something for me that previously was not able to be built or a market I couldn't go into? And I just thought that was so great because again, AI is not the value proposition. You really have to demonstrate ROI to your customer.
Oh, I think that orientation is excellent. And I know this feels a bit like a weird bridge, but I'd wanted to talk to you about leadership and learnings because I suspect there's a lot going on. Rebecca confirmed this for me when I was chatting with her in advance to get my goods in gear. So you've been part of Index now for a better part of a decade, correct? And I suspect you've learned a lot about the venture ecosystem and what works and doesn't work and what shaped your investment philosophy. And I suspect it's leading to the kind of investments that you're making. But I don't want to put words in your mouth. Could you unpack it a little bit and just tell me I know it's a big question, but some of your biggest lessons?
Yes. So when I interview people, I always ask them, what do you know now about investing that you wish you knew when you started? And for me, it's a couple of things. So first and foremost, a lot of people throw out this concept that venture and investing is a craft. And so a few years ago, I went down this rabbit hole of studying people that are phenomenal at what they do and this concept of mastering a craft. And if you kind of boil it down, it really comes down to a couple of things. Number one, you need to really determine what your life's passion is and what you really want to be excellent at and be all in. Number two, you need to become the ideal apprentice yourself. That means having a growth mindset, knowing where your blind spots are, seeking feedback, and just constantly trying to improve yourself. The third thing is to seek out and learn from people who have excelled in that industry. And that's either studying them from afar or turning them, if you can, into mentors. And then the fourth thing is you have to practice and practice and practice, but have a tremendous amount of patience because improvement is not like a smooth, linear line. It's really like you could have, you're plateauing, and then all of a sudden you get really good at, for example, your backhand or whatever it is that you're trying to practice. And then the last one is be multidisciplinary. This book that I read, The Art of Learning, is written by an author, Josh Waitzkin, who not only was a grandmaster at chess, but he was also top athlete in martial arts. And now I believe he's one of the top surfers in the world.
Dear Lord.
And he was exactly. And you ask yourself, how could somebody be the best at those three very different things? And he talks a lot about how his father used to make him take summers off from practicing chess to go fishing. And that all of his chess teachers were like, you know what, Josh is going to be behind. His competitors are practicing 18 hours a day. And his dad was like, nope, we're going to go fishing every summer for 3 months. He's not going to touch a chessboard. And he talks a little bit about how that gave him a different perspective, how it changed his focus of his brain, that when he came back to chess, he was more creative. And so I think being multidisciplinary is also really important. So all that to say is, number one is really thinking about venture like a craft. And what's hard about it is it's not like you can get the feedback loop of like a sports game where you're like, okay, either I won or lost. And then you study every move that you made. But I do try to, on a weekly basis, every Sunday night, do a look back of okay, how did I spend my time? For the meetings I took, should I have taken those meetings? Did I have the time to prepare the 2 key questions that mattered? Was I great at building trust with the entrepreneur quickly so I could really understand who that person was? And for me, that's been a great way to kind of get that feedback loop. So at least I can continue to learn. And then the second thing I would say, apart from seeing venture as a craft and studying it that way, is really how important the entrepreneur is. I think that there's different views of B plus founder in an A plus market and what those outcomes come to. But at Index, it's all about the people and really being able to, again, understand like what makes someone tick. When we make investments in entrepreneurs, we try to see them in many different settings: professional setting, social setting, comfortable setting, uncomfortable setting. We try to understand what their bar of excellence is, who they look up to. And I think that's a constant thing that you can hone over time and study. And I've been very fortunate to learn from some of the best people.
Wow. So let me bounce a question off of you, because I honestly don't know how you do it. So I'm intrigued by this. So I'm going to start with my bias is that I think a lot of investors don't know what great looks like. Right? Sometimes, especially if you're starting out your career, because unless you came out of a great company, how would you know? But yet you want to hire people who will become great investors. So how do you thread that needle? Because again, my perspective as an LP is it is intrinsically different watching an investor who's seen what great looks like and how they sort versus people who are still learning. So if you're hiring people early in their career, and I ask this because I think there are a lot of people that want to be venture capitalists, and I bet there are a ton that want to work for you. So how do you see the early tells of great?
I'll share a little bit about the characteristics of what we've kind of honed in on that are good leading indicators. And then I can also share what I do, for example, for onboarding, let's say someone that's very young in their career, how they can calibrate what great looks like quickly. So number one, I think we look for people that really do lean into this concept of this is a skill that can be honed over time. And this is not like a climb the corporate ladder quickly career. So that's number one. Second, I talked a little bit about thriving in ambiguity. So venture capital attracts a lot of, type A, OCD, very competitive people, myself included. And it's an adjustment because you go from just give me the goalposts, like Rebecca said, I will get shit done, to all of a sudden, here's a blank calendar, go make some magic. And I think people that can thrive in that and be okay and really settle into the journey versus the destination, we really try to test for that. And then the third thing is the ability to take the wheel. Like I said, I really love racing cars and Formula One. And so that's my analogy, which is, someone that goes to a conference, they meet a great founder, and they're already thinking like, okay, what needs to happen to get this person into the door for us to make a decision? Okay, I need to do X, then I need to do Y, and just taking the wheel and taking charge is really important. So those are some of the things that we look for. And then in terms of calibrating great entrepreneurs, it's such a blessing to have all of these podcasts and videos and conversations. And, I love, for example, the podcast of How I Built This, because you can really hear the clarity of thought an entrepreneur has. Now, of course, this is at the end of, sometimes when they've already made it versus like who they were 10 years earlier. But you can kind of start to see like, okay, this is the destination of what someone needs to be able to do. And does the person I'm talking to today have enough of the glimmers of that clarity of vision or that ability to just have charisma and sell and recruit? Or, do they have the ability to like run through walls? And so that's a very helpful framing of, okay, this entrepreneur needs to be able to kind of look like this one day. And could I see this person growing into that? So that's very helpful.
I hear that resonate in the market with the clarity of thought, which you might not have done it yet, but can you talk about it? Can you describe it? Are you thinking however many steps out one needs to think? And I guess there's lots of folks that don't. And so the ones that do stand out.
I remember when I was making my, study guide for VC to share with some of our associates, there was this talk that Don Valentine gave. I think it was at the GSB. It was like over 10 years ago. And he gave this story about how this entrepreneur was pitching him and spent 15 minutes in the pitch. And it was clear no one around the table knew what was going on. And Don Valentine just took out a business card, flipped it over and was like, please write what you're doing on this business card. And so, it's a small, funny story, but I think it kind of highlights that you should be able to communicate crisply and concisely why it is, you're dedicating your whole life to doing what you're doing.
I also want to spend a moment talking about your leadership outside of Index and the founding of Hive, which, as I understand, the goal is to catalyze the global Armenian tech ecosystem by investing in startups led by Armenian entrepreneurs around the world. And just to bring it full circle, the ServiceTitan founders are Armenian. So
Yes.
I would just love to hear the story of your founding of this fund and how that's connected and sort of bring us home with this side of it.
My parents are 100% Armenian. They were descendants of the Armenian genocide, and they ended up being born and raised in Iraq, in Baghdad. And so I grew up in the U.S. with just such a perspective and privilege where I felt like I was so lucky to be born in a land where, there was safety, that I had the opportunity to work, that I spoke English. And so when I, moved back to San Francisco and started working at Google, I would constantly get these cold emails from Armenian entrepreneurs that were trying to get into Y Combinator or 500 startups at the time. And they were just like, we saw you're Armenian. Do you think you could help us out? And I started to do calls with these founders. And I was like, gosh, this is a country that had only a few hours of electricity when the Soviet Union collapsed in the early 90s. And so I kept thinking if I could just get them some access to venture capital or someone that could give them some advice, their chance of being successful would be like, a million X what it is today. And so I was really fortunate that a foundation decided to back me behind this vision and invest in Armenian startups. And that's really how I even discovered that venture capital, could actually be a job. And ServiceTitan was one of the investments that I made through Hive. And what was so incredible is Ara and Vahe had a desire to open an office in Armenia. And so I sat down with them, we brainstormed, and I helped find their first employee there. And to their credit, they built it today to now have over 500 employees. And they've really just totally revolutionized the tech ecosystem there, because now of those 500 employees, there's been a lot of wealth generation. They've been exposed to what a best-in-class tech company looks like. They will probably angel invest and advise future founders. And lastly, I think that they really inspired an entire generation where it's not just engineers. They have product managers, designers, and they've shown that this is how you treat employees from a culture standpoint, compensation. And I think it's just the beginning for the impact that they've had in Armenia. So it's something that's near and dear to my heart. And I could have never imagined that it would have turned out to be just this big of an impact.
What an inspiring story. I love it.
Thank you.
Oh, I can't think of a better way of ending. We really appreciate your welcome back anytime. Feel free to come on at end of year, beginning of year, middle of year. We can check in anytime.
I appreciate it. Thank you so much. And looking forward to seeing how it turned out.
A big thank you to Nina for joining us today. You can learn more about her and Index Ventures at indexventures.com. This and more links are also in the show notes. Be sure to tune in next time for a bonus mini-sode where I'll unpack the learnings from this conversation with a special guest co-host, my fellow partner at Sapphire Partners, Nate Leong. You can find that right here in this feed. And while you're there, please rate and review the podcast. It's super helpful for others looking for venture insights to find our show, and we truly value your insights and suggestions. And lastly, if you're hungry for more venture insights like these, be sure to subscribe to the monthly OpenLP newsletter, where we curate a short list of the month's most thoughtful venture content from the top GPs and LPs. You can do this at subscribe.openlp.vc. I'm Beezer Clarkson, and on behalf of me and my GP co-host, Nick Charles, we'll be back soon. Thanks for listening.